This is going to be probably a fairly dry half an hour, but I'm going to make a deal with you. And that is effectively, I want this to really be the last time, you've gone for the sweets already. I want this to be the last time this year I stand up here and talk about tax. I've talked about it quite a lot, I've given quite a lot of information to this community, and I want to get back to doing fun stuff like talking about goats behind screens or power law on pomegranate seeds and stuff like that. So, you know, what the deal is if you still hold tax personally, this next half an hour is going to be really dry, it's going to be really technical, but please just pay attention. There's a lot of information on the screens. It's mainly there because the slides in this video will be provided afterwards, and hopefully it will give you some information to be able to work through, digest and understand this all yourself. So if you can do that, then I will not come back and talk tax for the rest of the year, and that's a promise as well. So, this is really just going to focus in on personal tax. And the reason why I want to focus on that, way back in October 2021, when I did the first talk for Siam in here, I said what will probably happen is there will be an amnesty, there'll be some sort of hurrah from the HMRC where they'll say, right, this is your last chance to really self-declare what you're doing before we start coming after you. They did it with property. People were selling properties and not reporting those gains, so they put a portal up to allow people to report property, and then they changed that, so now every time you sell a property, you don't actually get to wait until you do your tax return, you have to declare that within 60 days. HMRC are now doing that for crypto. And so this is the real last chance for you to get ahead of the tax man, because the tax man is coming. Sorry, there was a joke there, but I'm not going to make. Professional. So basically what I want to do here really is just kind of run through some high-level steps and in a bit of detail about how you can sort this out yourself. And like I say, it's quite dry, there's quite a lot of information in here, but please just listen to it, work through it, understand if it relates to you, because this is going to really be your last chance. So, personal tax update as at February 2024. So this is around reporting your own gains or losses on crypto and effectively getting them into a tax return. So we've just gone past the last tax year. So now is really the best time for you to start thinking about planning, structuring and understanding what you're going to do in the future. So the next tax return that we've got to do is going to be for April 23 or to April 24. So until we get past the 6th of April 24, that's the next tax return that we've got to do. That doesn't have to be submitted until next January. So for the current tax year, we've got a long while to work this out, plan and understand. Also what you can do is you're allowed to go back and file the previous 12 months without really any penalty. So you go, oh, I made a mistake on a previous tax return, so you can go back and file that. And that will be so we can resubmit a tax return for 22 to 23 without really any penalties. You'll pay some interest at 6%, but effectively the tax man sees that as you just correcting a mistake that you knew about. So we can get this year right, we can get last year right, and then anything else from before there, they've effectively now opened up this voluntary disclosure portal. They've written to about 50,000 people as well, telling them that they've got to use it where they know information. So some of you may have had notes from the HMRC. But when they say voluntary, they mean this is here, report it, we know what you're doing. If you don't volunteer it, then we're going to start coming after you. So this is the last final warning from the HMRC effectively. So I want to kind of go through and just give you that information on how you can start looking at this yourself. So the steps that you need to complete, what you need to work through to be able to get yourself fully compliant from a tax position. First one, and I'll go through some of these in detail. First one, calculate your gains and losses on crypto. Sounds really easy. We all know it isn't because of the fact that you guys just aren't buying a couple of bits of ADA on Coinbase. So unfortunately, the burden is on you to get that right. So if you want to fudge it, if you want to make shortcuts, the burden will still be on you when the taxman comes to prove how you got to those numbers. So you can log all the transactions yourself. Again, if you're just buying some NFTs or you're just doing some small trading, you can probably just do that in a log. There's some software out there, Crypto Tax Calculator, Coinly, various other ones. They're good. They record all the information, but they're still quite clunky. Or you can actually pay someone else to do it. not that I like to plug other accountants, but there's an accounting firm out there called Minor Accountants who will basically plug your stuff into a crypto tax calculator for you. I put that up there because I feel like I should, but again, the onus is on you. If you can't fill out the crypto tax calculator yourself, there's no way in hell they're going to do it. So they're just going to bring the information back and request from you. I think did we use Minor for you at one point?
Useless.
The report was garbage, wasn't it? You spent a couple of grand and we ripped it up. So
honestly, I used Minor. They did it all and they didn't have a clue. I then went to Steve help, and then Steve...
We unwound it all, didn't we, basically? Yeah. So they'll provide a report and they'll go, based on all the information you gave us, you've got 10 grand's worth of gain. But ultimately, you then put that on your tax return, and when the taxman comes back and goes, why did you do that? It's still your fault if it's wrong. So my advice really would be, if you've got lots of transactions, spend some time on a crypto tax calculator or a Coinly. It's going to be the worst couple of months of your life trying to backtrack it and fill it in and get it right. But once you've got up to date, logging it through, going forwards, is paramount. Again, this is at personal level. Companies and all that sort of stuff are a different ball game. So once you've calculated all your gains, going back however long you need to, basically sense check your answers, which we'll run through. The HMRC then will charge you interest and penalties on any old gains that you haven't reported. We'll go through that in a bit more detail. Again, now the onus is on you to calculate what interest you owe the HMRC and what penalties you think. Yeah.
We're talking about realised gains, right? Not just your holding history.
Realised gains, but realised within the context of the tax rules. So again, from one of the previous talks, I still hear that, I've not taken any money out, I've not done. Every small transaction crystallises a gain. If you move CAS into a stable coin, then back into a cash, you're crystallising gains. You're moving it, staking is crystallising a gain. Airdrops are a gain. So every small little movement, if you've just bought some ETH and sat that over in a pot and you've not looked at it for 6 months, there's no gain. Even if it's gone up in value, you've not crystallised anything.
So with Town, you get yield every 12 seconds.
Yeah, so that's well, hopefully, again, and this is where the crypto tax calculators are a pain, because when we were in Time, they didn't even have Avalanche Network on there at the time. So if it's picking up TAU, it should be bringing those in as an airdrop, effectively, and that's income tax.
It doesn't yet.
Does it not? So if you know that and you've got a big pot in TAU, log that separately so you can just append it to it, or just manually put in an airdrop. Again, you're not going to do it every second, so perhaps every week we've just done 4 TAU, let's manually put that into there. There's an assumption there. If the taxman gets down to that level of detail, they're gunning for you, let's be honest. But don't just ignore it, and don't just basically just don't ignore it. As we said, they're slow, they're not stupid,
If you do that daily, do you then say the price of TAU on that day was that, and that's your gain?
Yeah, ideally you should do it every 15 seconds, which, when they plug it into crypto tax calculator, it will do it. But yeah, for the time being, they probably don't. So from an interest and penalties point of view, you have to tell the taxman what penalties you think that you've paid, or you should be paying, why you've done wrong, how you've done wrong, and we'll go into that in a bit more detail. Basically then, complete this year's tax return, refile last year's, complete any compliance for the previous years, and pay any tax due. So we'll get into a bit more detail. Some of these slides aren't particularly great. So crypto tax calculator, you have to go through, you've probably seen it a lot with these or Coinly or stuff, where you API link in your wallets, you analyse everything as much as you can, and it spits out a nice shiny report at the end. And effectively what you're looking for is this piece here. So you need, on this one, which was a client who said we could use it, he effectively had 818 disposal or transactions during the year, disposal proceeds of 18 grand, costs of 13, and therefore gains after sort of losses and such of 4,400. And those are the exact numbers that you need for a tax return. It will sometimes give you income tax as well, if there's any, but I've stood up here before and I said there's sort of this trading trap. where they'll try and catch you potentially into trading based on regularity, commerciality, degree of risk and organisation. The HMRC still want to try and push as many people as they can into capital gains tax. And we want to be in capital gains tax because it's the cheapest tax rate we're going to pay at 20%. So again, completing these reports, declaring yourself, you can then declare it into capital gains tax. Your report's showing capital gains tax, the HMRC saying capital gains tax. I've seen reports on here with thousands of transactions, which you could argue is frequency and regularity enough to be income tax. But at the moment, the way that this is linked to the HMRC and the guidance means that we can deem it capital gains tax. So push it for that. You're declaring it, you're reporting it. You don't want the HMRC coming and telling you what it should be, because then you're on the back foot. So we can get a crypto tax report out. So that'll be the worst 2-3 months of your life trying to fill it in. You might end up with 5-6 years worth of tax reports that you've got to fill in depending on where you got into crypto. And then you've got all of these nice reports. They all tell you what your gain or loss is for a particular year. And then the next step, which I think is the most crucial, which is sense check your answers. The one thing you can guarantee is whichever report you're getting out of Coinly or Crypto Tax Calculator, it will be wrong. Without any other fail, you know full well the volume of transactions, the amount of information in there, it will be wrong. So sense check it. So just as an example here, say you go, right, I know I've taken £150,000 out of crypto. I know that that's what I've taken out over the course of the last 5 years. As at today, my MetaMask balance is 70 grand, my Mexi balance, my Kraken balance, my Coinbase balance are all these amounts. And I know that I originally put in £100,000 worth of cash. Therefore, the maximum gain I should ever really be seeing is 357 grand. I know physically from the balance today, cash out, cash in, I should be seeing a balance of around 157 grand's worth of gain. So that's my kind of mental check that I have on the side. Then you get your crypto tax reports and you go, actually, if we add up, say, 6 years of the reports, they're coming out about 300 grand. You can then go, right, that feels about right. If this is coming out at 500 grand or it's coming out at 10 grand, you're an order of magnitude away from what your maximum gain should be, that it just doesn't feel right. This sniff test is important. It'll never be exactly the same. There'll be reasons why you're reporting less than your maximum gain because you've got a hodl pot, it hasn't crystallized. There's information perhaps missing, so use that as an opportunity to go back and check. And also you may be doing this 6 months after the actual tax year end. It could be the other way. You could be actually reporting a higher gain than your max, and that could be because you've had some losses since the tax year end and you need to make sure that you're correctly pulling those in as much as you can. But this sense check is key because that just gives you an idea of how far out these crypto tax reports are and whether you need to go back in and have a look. And then off this example, we'd then be going, right, okay, we've got a 55 grand gain for this year, we've got a 15 grand for the resubmit for last year, and then we've got to do a voluntary disclosure for a big lump over there. So we've calculated the gains, we've sense checked it. Yeah, unfortunately, these reports seem about right. We've got a 300 grand gain to pay and disclose. Then we need to just start going through it. HMRC will charge interest on any late payments, and anything that you've not declared for previous years is deemed a late payment. They charge, or you have to pay, 2.5% above base rate for any tax that you've not paid. If it's a credit and they owe you money, they'll only pay you 0.5% or 1% over base rate. So they clearly arbitrage that quite nicely. So for, excuse me, if you've not, resubmitting a prior year tax return at the moment, anything you've not declared for the previous year, you're paying about a 6% interest rate on at the moment. And they'll only pay you 2.5% if they owe you it, which is key. So there's this link to the website where you have to go in. You have to say, I haven't paid the right tax for last year, plug in the numbers, and you have to calculate what interest you're telling them you think you have to pay them. And then they'll come back and tell you if you're correct. It's a fairly good spreadsheet, to be fair. You just choose which years you want, tell them what the gain is. So on here, we're saying for the tax year 21, we should have paid £6,000, and there's a £605 interest payment, which we've got to declare and put onto the tax return.
Steve, just for clarification on that point,
Yeah.
the interest will apply to the amount which you actually end up paying in tax, not the gain in entirety itself.
Yeah, it's the tax payment you should have made. So what they're saying is, you should have paid me £6,000 2 years ago. You haven't. Therefore, us as the Treasury have lost out on interest, and therefore we're gonna hit you with a 6% interest charge.
Could you just run back to the previous slide?
Yeah, sure. Like I say, these will be available on the RT portal. There's a lot more information on here. Oh no, wrong way. That one. That one. That's what you wanted, wasn't it? Sorry. So not only do they hit you with interest, then also they hit you with penalties. So and this is part of the voluntary disclosures. This is going back past 2 years now. So anything this year, you're not going to get any penalties on because you're disclosing it correctly. Last year, you made a reasonable mistake. You've gone back and corrected it. You paid a bit of interest, therefore you're fine. Past that, outside of that 12 months, there's penalties due. And you have to choose these. So this is the key table up here. And it's based on, well, firstly, unprompted disclosure or prompted disclosure. So if you're getting letters in a couple of years' time from the taxman saying, we see your Coinbase account, we see your Binance account, we see your bank statements, we know you're in crypto, you're not reporting anything, you have to do it, you're in the prompted disclosure, which can be anything up to 100% of the tax due. So if you owed 200 grand tax for previous years, you could pay another 200 grand in penalties as well as interest. At the moment, which is why I'm saying this talk is the most important I'm going to be giving to you, is we're arguing we're in the unprompted disclosure. They've put out this guidance. We've just seen this guidance. We've always thought, oh, hang on, I don't think there's that much in there for tax. I didn't realise, I didn't understand. However, we've now seen this and we are unprompted going, we're now going to disclose this to you, Mr. Taxman. So we'll be arguing we're in unprompted disclosure. We'll be arguing we're taking reasonable care or a slight amount of carelessness. So therefore your max penalty can go up to about 30%. When you get into deliberate, you're 20 to 70%, and deliberate and concealed, 30 to 100%. These are guidelines as well. I had a property disclosure where I saw someone who'd deliberately concealed it. They'd hidden it from us as their accountants, hidden it from the taxman, purposely 150% penalty on their undisclosed gain on property. So they will try and make examples. And so at the minute, paying old tax is pain, paying old tax with interest is an extra pain, but if you're having to pay 100, 150% penalty on top of that, that's going to wipe out anything we've done in CASB or TAO very, very quickly. Some information up on there on what counts as reasonable, what doesn't count as reasonable. This will be an argument. You have to go in and go, oh, I think I've taken reasonable care, 0% penalty, and then they're going to be arguing the other side of it.
Again, sorry.
Yeah, no, please do.
That's on the taxable amount, isn't it? So
Yeah.
if you owed 20 grand in capital gains, they could theoretically be 100% on top.
Yeah, it's not on the actual, it's the tax of the gain. So if you made 100 grand gain, you're paying 20 grand tax, you could end up paying 40 grand tax because they'll double it with the penalty.
So you could effectively go up to a 40% capital gain.
Yeah. Or, again, they're going to be trying to make some examples out of this. Let's be honest, that's what they did with property. And that's why now is the time to get on the right side of this disclosure. As much as it pains me, I'm as happy to not pay as little as or happy to pay as little tax as the next man, but it's now in their targets. So, the first one, as we said, and it's best to try and do this in a quick order and have it there ready to go in one go. What you don't want to do is submit the current year, show some tax, and then the taxman goes, oh, hang on, let's just double check this. And then before you can submit the old stuff, you've got a letter prompting you to disclose. So get all of your ducks in a row, everything in order, We've got time. I say you've got till next January to file this year's return. You've got till this January to resubmit last year's. So there's no rush, but get them all together in one go, and then very quickly submit your current and prior year. You can use an accountant, but if you're just doing crypto and you've got, say, a job with a P60, it's not that difficult. It's a bit complex and a bit to go through, but if you've gone through the hassle of all the crypto tax calculators, it's not that difficult to do yourself. Register for self-assessment tax if you haven't already. They'll send you a unique tax reference number, UTR. You can then set up a government gateway, and then you can log into there and file your tax return. And if you're employed and you've got crypto, you take your P60, all the details are there for employment. And for the crypto, all you need is that report off Crypto Tax Calculator with those 5 numbers. So it's not difficult to do. And by all means, we're part of the RT community. If you get to that point, you're more than welcome to give me a shout. We'll have a quick look at it for you and double check you're okay. Current and prior year, then done. Voluntary disclosure. So this is the portal that the HMRC have now set up, and they've said, right, you now need to come and tell us about your crypto. So a bit of information there as to what you need, but broadly, it's the Crypto Tax Calculator reports, the information off the front, the actual reports as well. Download them, submit the whole lot. I think one of them I did was 250 something pages of transactions. Send it all to them, show the level of detail you've gone in to do that. And basically you'll go through the portal, they'll ask personal details, they'll ask the reports of the gains. So it'll be, we're submitting this year, here's the details, submitting the next year, here's the details, and you can file all 5 years worth or 1 year or however many you need to, just in one disclosure. Calculate, you have to calculate the tax that you should have paid. So again, you'll look at what the gains were, you'll look at what tax you should have paid, capital gains, 20%, work it out. You'll also have to in there submit the interest calculation and declare what penalty you think you should be in. And then what they also ask, which I thought was quite interesting, is they ask for the top 5 crypto assets that you like to trade and the top 5 exchanges you use. And you cannot submit this report without disclosing that information. There's no law in tax, there's no reason for why they should be asking that other than to get more data on what you're doing. So you'll have to have that, there you go, yeah, any crypto assets exchanges. And so you have to list those. Crypto tax calculator will also have them at the back of the report because it'll show what you've logged into there. So just make sure they tally. Yeah.
Sorry, 2 questions. So Coinbase are telling HMRC everything that they have on the books.
Yeah.
Do you know of any other exchanges doing that?
No, I haven't heard officially. The only official one that I've seen is Coinbase, but you can guarantee the others are doing it and the banks are doing it. So even if you've not got it from that end, you've got it from this end.
So this may seem like a personal question, but I think there's probably similar people in other people in a similar situation. So take me, for example. None of my crypto is in me personally.
Yeah.
Because you've done financial magic to make it all business.
Yeah.
Crypto, etc. But in the past, I have had a Coinbase and a Kraken account in a personal name and stuff. And I think we paid tax on some sort. But because of the way you've structured me, etc., I'm not paying any personal crypto tax for all the businesses. Is it worth just voluntarily doing something like this and just paying like a small amount just to say, hey?
No, if you've generally correctly moved it into a business, if you then go, oh, I'm going to put, it looks like you've done something wrong by moving it into a business or whatever point you've chose to make that. You've declared all your gains up to the point where you move it into a business or do anything else with it. After there, you're fine. You know, and you've got a genuine cut-off. The bit that you may get challenged on, which you have to be aware of, is up until that point, and also since then, you may have used your own personal exchanges, your own personal accounts to account for stuff which is deemed a business. Now, you can completely legally do that. There's no reason outside of crypto for a company to have its own bank account. You can use your own personal bank account for that. It just means that when you get an investigation, the HMRC can see everything, including all your personal expenses and everything. So you try and keep it as separate as you can. But it doesn't have to be. And we know all the difficulties about setting up crypto banks and crypto exchanges. And I managed to set up a business one for Kraken recently, which was relatively okay, but on and off ramps and stuff are still an absolute pain. And so there's a good argument for the HMRC at the moment. If you are using a business to manage your crypto but putting it through your personal accounts, why are you doing that? Well, because I can't get a business bank account that will allow me to do it. And it's a reasonable excuse and completely valid. Does that answer your question? Yeah.
So Coinbase are reporting, and in the previous code you said the major exchanges are going to report everything.
I would presume they all are.
What about, I guess most of us have got Mexi accounts and stuff like that, where you're not KYC. They
Yeah.
can't possibly know what's in there.
No.
It's in Singapore.
Yeah.
But how did you get money into there to start with?
Where you go through the Estonian company.
No, but as in, like, your original money out of your bank account, your fiat on-ramp must have been through something.
Goes through Estonia.
So, but did your bank account go straight to Mexi to send money?
Yeah, but all right, they can see where it's gone, but you've got no, they won't know where it is now.
Of course they do. Everything's on chain. You tell me, if I knew that X amount, or I don't because of the but the HMRC go, right, you put 50 grand into Coinbase, which wallets did you then use?
But what if you put that money into Mexi? They don't know what you're doing.
They'll see it out your bank though, won't they?
If you send it from Coinbase to Mexi, they'll know, oh, that's the Mexi address. So they'll see 50 grand going from Coinbase to Mexi.
And that's it, they don't see more.
That's it.
Yeah, but they've got no idea what you've done with it.
Oh no, they don't. But then, so then you can go, oh, nothing happened after that. But then, but then you're in tax avoidance rules. Then you're purposely withholding it. Like with the burner coins. I've always said, if I was the HMRC, I'd be going, right, there's a burner coin. Right, what wallets have gone in there? Let's trace them backwards to a Coinbase account, because we can trace it back. Right, okay, Mr. Kidd, you've just used a burner coin. What happened? Well, if you then go, well, I had a lot of trackers and people following me on YouTube, so I needed to just kill that account. But don't worry, here's where it went afterwards, and I still declare it. Okay, valid excuse. Oh, I don't. If you go, oh, I don't know, it just disappears, and yeah, they're just gonna go right. Yeah, they'll start going down criminal proceedings and all the kind of anti-terror rules and all that sort of stuff. So it may get to the point where the chain breaks. But if you can't explain what happens afterwards, they're not stupid. They know it's for a reason.
And you've got to get it back out. So what happens when the profit or whatever comes back out? You've got to show where that came from too.
Yeah. Or if again, for people who are going, oh well, I'm just going to hide it and then potentially move out of the country, fine. It's a risk-based approach for everyone, but 99% of people won't do that. Like.
Steve, if you've been below the threshold in capital gains, do you still need to put returns?
No. So if
you've been below the threshold for 3 years or whatever, and then you are above the threshold, what you may be, depending on how you interpret it.
yeah, then put one in at that point and start doing it going. Yeah. Yeah, no, you don't know. So if you've just ticked along on a lower amount, I was talking to someone about it earlier, and one of the other arguments was, well, say I've only made a really small amount, or I've only got a small balance. There's an argument for saying, well, it's so small it probably isn't going to be on their radar or be an issue or anything like that. But what you've got to be careful about, and where I've stood up before and I've gone, right, presume you're going to lose it all, presume you're going to make $1 million. If you've got a small balance in crypto at the minute, there's an assumption that it could be worth millions. Now, what you don't want to do is under-report the small amounts as you go through the years, because then when you do something, you think, right, I need to start taking this out, I need to report it, then you've missed 5 years worth of reporting, interest, penalties, and all of the other stuff. So even the smaller amounts that just creep over the threshold, give them that information, give it to them early, and just pay the little bit of tax that you have to on there. It's a pain in the backside, but get yourself compliant.
So you can actually have some quite large amounts in the account, but if you have been growing it steadily over 5 years, each of those could be capital gains exempted.
Yeah, but there's also an argument that, and again, I haven't seen it yet, and it might be something they come back to, but on here, on this one, who's only got a £4,000 capital gain, the HMRC argument could be, well, actually, you actually made an 18,000 capital gain. Okay, you also happen to make a 13,000 capital loss in the year, but you should be reporting this because you've made such a large capital gain. I've seen some people that have made a loss for the year, but they've made 400 grand's worth of capital gains and 450 grand's worth of capital losses. I think we're right in the assumption to just net them off and disclose the net amount, or disclose it like this in terms of when you choose to report. But I would be suggesting that if you're presuming it's going to make huge amounts of money in the future, put this on a tax return, put your 4 grand on, less your 6 grand allowance for the year, and you've disclosed it. They know where it is. They know that you're not actually sitting on a 50 grand profit and you're hiding it from them. There's going to be no issue with over disclosing. But and again, particularly on the assumption that it goes large in the future.
Did you just say below 6 grand? I thought it was more than that.
I think it might be less now. It might be 3 grand actually. I think it's 3 grand for next tax year. It was 12. It went down from 12 2 years, so it's been 6 last tax year. I think it's 3.
6, I think, Steve.
Is it?
Current year 6.
Current year 6, and then it goes down. Yeah. Just gone through It's been January tax year, which finished like 2 days ago, so I'm like, frazzled on dates and things, but yeah, it's coming down.
When I've done it in the past on HMRC, and you haven't made more than the capital allowance, like 12,000.
Yeah.
I've said, I need to do the capital allowance section on my self-return, and they say, what was your gains? And you're like, well, I made 10,000. They're like, okay, you don't need to bother with this section.
Yeah.
But at that point, say you started with 10,000 and you made a 10,000 gain, so your pot is now worth 20,000 crystallised. Yeah. Moving forward to the next year, is your starting point 20,000?
And that's why you'd want to try and.
But how do you submit it if they don't let
you? Well, you can put again on here. You put your original gain is 18, and your allowable losses are 13, because what you want to do is try and record, or just keep a tracker effectively of the gains going forwards, the losses in any particular years, and when you get cumulatively over that threshold, then report it. I'm sounding vague because in that regard it's not been tested. So technically, from a pure complete answer, no, unless you get over the threshold, don't bother putting it on.
And so you could literally say, well, now my starting pot is 20,000 for the year next year.
Yeah, and so
I made 10,000. It wasn't owing any tax, so now I start with 20, a fraction.
Yeah, but do those reports. Do the do these and go right. Okay, if we're kind of going through the year by year, 9 grand, that was below the threshold at that point. But do the report, sit it on your file, write why you didn't disclose it. The next year, 9 grand plus the 14, we're actually underwater. Here's the report. I haven't disclosed the tax return. This because we're actually minus 5 grand. Next year, minus 5 plus the 20, we're actually at 15. The threshold was 12, so therefore we've got 3 grand to pay, and disclose it just at that point. But what you want to do is keep that narrative and that reason why. So if you do get an investigation and they sit you down and go, well, what did you do? Well, here's the rationale for why I did it. And if they then do go, well, actually, you should have done it this way.
Because they literally don't let you do the capital, or you can probably manage those right, but the system goes, oh, we don't need this section, so we'll give it to you to fill it in.
Yeah.
So it's almost like, okay, cool, thanks.
Yeah, but I've done it before. I've seen clients where they want to just log it, where they've had a massive capital loss and they want to book it. And we force it through the system because you want the HMRC to see, I've just made £500,000 loss, and therefore if you see £500,000 coming through my bank account, hopefully the computer will trigger it and offset it and it doesn't look. But you could just produce the reports, have them sat there, because also, the gain might not come for another 5 years, in which case you can't remember what happened 10 years ago. Have that note there ready so that if the HMRC comes and sits down, you can go, look, here's the reasons why. Here's the assumptions I made, and then if they do start looking at penalties, you're in effectively reasonable care. You're definitely not then falling in deliberate and concealed. You made assumptions, them assumptions may be wrong.
You've got no tax.
Yeah, there's no
tax to pay.
Yeah, and they go, oh yeah, exactly, yeah. 100% penalty on nothing is nothing. So, but you can then at least show that you haven't concealed prior gains.
So why your starting balance is now 50 grand, not 10 grand
Yeah.
after 5 years.
Yeah. So, like I say, either keep it, for them smaller amounts and that, just keep it on file. If you've got a big loss or something like that you want to put in front of them, just consider pushing it through the system.
Well, I guess losses are more important because you could then offset the next year. So if you made a 10 grand loss, or even a 5 grand loss, you still want to book that because That accumulates, doesn't
Yeah, but you just keep it on a paper file. But if you've made like 150, 200 grand loss, I'd consider trying to just force it onto the tax return, just because again, if you then suddenly see a 200 grand gain, you kind of want that in the system for them. But you wouldn't get penalised either way on that, I don't think.
How long can you hold on to a loss?
Losses carry forward indefinitely.
Forever.
Yeah.
So if you made it 10 years ago, you made 10 grand loss on options.
Just keep carrying them forward.
Keep carrying forward,
Yeah.
And you make 10
Yeah.
grand in crypto, then you're there.
Yeah, so that's, so where were we? So effectively, you're then pushing this disclosure through, and what the way they word it, which I had to take a screen grab. So this is, I'd gone through all of this for a client, and this was the final page where it said, and the way they word it is this is your offer. So you must now make an offer of the amount you're going to pay the HMRC. Based on the figures you provided, the total due is 10 grand. If the person assessing your disclosure because this is incorrect, they will contact you. And then you put, to the Commissioner of the HMRC, the tax duties, national insurance contributions, other liabilities on the statements attached are unpaid wholly or in part because of my failure to meet my obligations under the relevant acts and regulations. I'm just going to read it because I think it's hello. On the basis that no proceedings are taken against me for these liabilities or for the penalties, surcharges, interest on them, the taxpayer, Steve Collins, offer the sum of, and then you have to physically type an amount in there. Now I would suggest that you don't make that lower than that number there, and you just put that number in. And then effectively, the interest calculation that you submit, they make you submit the calculation. You have to add 30 days of interest on, because effectively what this does, this goes off to them. So this was completed 25th of January. You then have to pay this by the 25th of February, so they give you 30 days to pay it. But there's no way to pay it. You send off the offer to them, and then they write back to you saying whether they agree with your offer or your calculations. And then effectively, hopefully they come back and say, yes, you've put a reasonable excuse in, you've put the reason why, you've calculated the interest. They send you the details of where to pay, and then you pay and you're compliant. I've not seen any of these come back yet, because most people have been waiting to this January tax return to do so. The only caveat to me not talking about this again is should there be a small amount come up on here, but it'll probably be a post that I'll get Siam to put out. But this is the final straw, basically. So conclusion, do not ignore the opportunity for voluntary disclosure. Now is the last chance saloon. HMRC know about the crypto, they know about the exchanges, they know about the banks. The penalties could be massive. And we're at the start of potentially the start of a bull run. Use it as an opportunity, if not, to declare all of your personal tax up to date and look at how you could restructure. My personal recommendation at the minute would be, if you're happy with how it is in the personal side, personal is going to be the lowest form of tax that you're going to pay at 20%. You can't engineer it between other projects and stuff like that. But you're keeping it in personal certainly isn't on the wrong side of HMRC at the moment in terms of 20% CGT. And all the excuses are now wrong. They're irrelevant, they won't care, they won't give a shit. You've now got to start doing this.
Can you expect, if you make such a self-declaration, that they look more closely into your future declarations? Sort of,
Yeah.
are you listed or something? Or?
Well, that's why I said do everything in one go. You spend the next, like I say, there's no huge rush on this at the moment. There's no real deadline that's been put into that. The next tax return's got to be done towards the end of this year. Get everything done. But you will then be on their radar for crypto because you've declared crypto. But bluntly, you are anyway. And like with property, this was basically where they came after people in property, and they actually completely changed the rules for property. Like I say, you don't put them on you still put them on your tax return, but you actually have to declare them 90 days after any property sale. There'll be something like this where they'll try and make it more compliant, or they'll use this as an excuse to change how it's reported. But basically, this is them putting the final shot across the bow, and then they'll start writing letters to everyone and sundry. I believe.
If they accept your offer and send that letter back,
I've not seen it back yet.
but if
They will.
does that mean that therefore they don't come
Yeah, that's you disclose, and that's what. You say here on the basis of no proceedings are taken against me for these liabilities or penalties. Now,
So if they come after you, you can say, I want my offer.
I've got this, I've done this. I mean, it's the HMRC. Ultimately, if they want to launch an investigation in a couple of years' time and go back, you can try and rely on this. They might change the rules, backdate it, adjust it, or say tough luck. I've had one case that wasn't related to crypto. It was related to some furlough claims where basically the HMRC were in the wrong for how they'd done a bit of furlough claim. They'd tried to charge some back off a client, and I was arguing with the HMRC and got to their technical team, and the technical team said, yes, we agree with you. We completely agree with your point, but if we agree to that, we're going to open up a huge floodgate. So the only way you're going to win this, Steve, is if you take us to court. At which point I went, we'll just pay the bill. The client's just got to pay the bills, because you're never going to beat the HMRC in court with the bills. So it might even get to the point where they are completely wrong, but the only way you're going to fix it is to sue them, unfortunately.